Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and in today's video, I'm going to talk about the trades I executed for November 17th. I'm going to talk about the individual covered calls and the cash secured puts that netted me about $1,500 today. Then I'm going to take a step back. We're going to talk about the project State of the Union and discuss key metrics like how much premium I've made since April, since transferring over from high income ETFs over to my own trading. And we're going to highlight a couple of interesting metrics I've been tracking. Then lastly, and most importantly, I'm going to talk about the trades I plan on executing for tomorrow, November 18th, based off of my portfolio. Everybody's portfolio is different, but I follow a couple of key concepts. So one, I don't lose money, and then two, I can lock in as much premium as possible to then grow my account. So let's get the show started, guys. For anyone that is a returning subscriber, you guys know me. I like to show my Robinhood as the first screen we look at just for sign of transparency, and my spreadsheet numbers are based off my Robinhood numbers. So currently the account is at $199,463.28. I have a couple of different holdings right now, but I'm not going to really dive into the details. I'll talk about that more once I start talking about my trades for tomorrow. So let's head over to the spreadsheet. Today was a busy day for a Monday. I had 4 covered calls of Tesla that I sold, and then I ran 4 options for QQQ. 2 were covered calls and 2 were cash secured puts. And let's dive into the numbers. So the way I operate my options trading is every 100 shares I buy of a stock or an ETF, I like to consider it as an individual silo of money that's independent of itself. No matter how much premium I make, I'm still going to consider whatever my buying point as the mark of how I choose my strike prices. So let me explain. So for this first Tesla covered call, my buying point was 420. These were assigned after a cash secured put I ran last week. And for today, because the market opened at the 398.85 for Tesla, I decided to choose a strike price that was at my buying point. I don't like choosing strike prices below my buying point because ideally you can risk getting assignment, and then you have to be a little bit more proactive of a trader to then roll the option if that is the route you're going to take. I have a day job. I can't sit in front of the charts and look at all the ups and downs. So therefore, for me, the easiest route is just choosing something that is at my strike price or at my buying point, and let everything play out as it should. For that first option, made $610. Tesla closed at the 408.91, and that option is currently still active. I ran 3 other options in this similar situation and methodology. I had a buying point of 440, chose a strike price of the 440, buying point 442.50. Strike price 442.50, and then also another buying point for Tesla at the 440, chose a strike price of the 440. So those netted me $120 of premium, $174, and then $203. Moving forward to QQQ, I ran 2 dailies for QQQ cash secured puts. I chose a strike price of the 606. QQQ opened today at the 606.27, so I pretty much ran a cash secured put at the money because I definitely like this price point for QQQ. Literally a week or 2 ago, QQQ was at 638, and now it's at 606. So I think it's at a steep discount. So therefore, I wanted to maximize my premium, and I didn't mind getting another 100 shares of QQQ assigned. And that was the same concept I used for my second set of cash secured puts I ran on the QQQ. Same story. QQQ was at the 606, but then 30 minutes into the market kind of spiked up a little bit. So then I chose a strike price of the 609 and then bagged $194 of premium with that option. And for my covered calls, they didn't net me too much money. And usually for my QQQ shares, I like to run them as dailies, but depending on your cost basis, like for my cost basis at the 626.78, I think it's a little bit too far away from where the market is trading for me to make actual premium. So therefore, for this set of 100 shares of QQQ, I decided to run a week long, and that week long netted me about $166. Chose the 627 strike price, and that option is going to be active until Friday, November 21st. But then for my second set of QQQ, it was a little bit closer to the day's trading, but it was still pretty far off. And I decided to run this as a daily because I wanted to see if potentially the market might recover on this Monday. However, it didn't really do that. So I bagged really bad premium, which I probably should have just ran this, 100 100 shares of QQQ at my 622 buying point as a weekly. So I could have captured a little bit more upfront money. I probably would have made a little bit more than $166 for a week. So maybe I could have ran that a little bit better, but I was being optimistic market would have been recovered by this point. However, I still don't know if the hedge funds are still, rolling in that tax loss harvest season, or if they're even doing that at all. It's just maybe, natural ebb and flow of the market. But bagged $6 of premium for a 622 strike price. This expired worthless. And yeah, like I said, tomorrow I'm probably just gonna flip this around and make it a week-long option. But because I now got my 2 cash secured puts assigned because they were both below my uh, strike prices, I now have 400 shares of QQQ to run as covered calls. 2 already locked in for. Wait, excuse me, sorry. 1 was locked in for the week, so then I have 300 I can trade as a week long or daily, depending on what I'm seeing with the market. And we'll take a look at Robinhood to get an idea of what that might look like. Let's head over to the Project State of the Union and start talking about the high level overview. Yep. So looking at November 17th, bagged $1,572 off of all those 8 different options I ran for the 17th. So I was pretty happy about that. Even if I don't make a single dollar more the rest of the week, I've hit that 4-digit club, and it's been 11 weeks in a row where I've been hitting $1,000 or more in my options trading. So I'm pretty happy with that performance. I don't necessarily like that the market is down, and I am a little bit heavily invested into Tesla, which is bringing down my account average pretty hard. But same story. If I would have been investing in QQQ, it would have been just as bad because QQQ went down $38 a share too. So we would be in that same boat regardless of doing the ETF route or the individual stock route. Tesla is a little bit more volatile and a lot more parabolic in its movements versus QQQ is going to follow the market. But for about 7 to 8 months of my own options trading, I've made about $68,999. Man, we're so close to that $70,000 mark. I think by the end of this week, we'll definitely hit 69, but probably the following weeks we'll hit that 70. Since trading my own options in April, I used to be invested into those high income ETFs were hot garbage. Decided I can do better job trading my own options, and here we are today. From April to now, I'm up 33.03%. About a week before the little bit of micro correction we're having now, I think it was up in the 40s. So I was pretty happy with how the performance is going thus far. Looking at my trade win percentage, I'm winning 98.68% of my trades. 2 of them were, I would chop it up to investor inexperience. Just leave it at that. And 150 winning days, 2 losing days, and I've only traded 152 trading days. If we look at the average premium I'm producing per day, it's roughly around $453 a day. If we look at that as a weekly number, I'm averaging about 2,156. And for the average monthly premium, $8,635. The numbers just seem to be getting better and better, even in a down market. For the average yearly premium, I decided to put this in yellow because for 2025, I'm not going to be able to trade for a full calendar year. So I decided to project out what my account would look like if my trading, based off of my trading metrics. And from what it looks like right now, I would be averaging about $112,000 a year from my own trading. And if we look at that as an average yearly percentage based off of my initial investment, that's about 75% return. If I think for 2025, from bringing in money from last year and some of the money I put in this year, it was about $150,000. So basically this number is coming off of a $150,000 investment. Cool. So with that being said, let's head over to the weekly numbers for this week. Like I said, we're at that $1,572. And since since September 8th, we've been hitting the 4-digit club quite consistently, 11 weeks in a row. We've almost hit 3 months in a row where we've hit $1,000 or more with good markets, with bad markets. And that's the reason why I like running your own options. It's not like those high income ETFs where in the red market, your share price is going to get slaughtered. And then you're basically getting paid your own money back. And it's just like this cesspool of back and forth. Here, the money you make, you're adding to your silo of money. You're adding to your pile of money. You're not getting paid back your own money. You're actually making profit on top of what you already have. So that's why I like running my own options. And I've been relatively successful since doing it in April. If we look at how much premium and appreciation I've locked in for the month of November, we're already at $8,560, guys. That is freaking wild. That's pretty much more than I make at my day job. And I'm trading 5 to 15 minutes every morning, and my account is as small as it is today. Imagine 5 years from now where I put more money into this account and I've been trading for a couple of years and it's at 500,000. Maybe it's at $1 million. You know, it's going to only go up exponentially from here. So that's what my vision is. I can't wait for the future. And these numbers are only going to get bigger and bigger as I continue to trade and as I continue to get more and more consistent. And for the yearly tracker, like we mentioned earlier, about 68, almost $69,000 of premium gain in about 7 to 8 months of trading. So not too bad. All right, with that being said, guys, let's head over to Robinhood and start looking at what I plan on doing for tomorrow. Okay, guys, looking at my buying power, it's telling me I have $397,000 I can use to buy more shares. I can buy maybe 600 more shares of QQQ and really start ripping some gains. But ideally, I don't want to go too heavy into my margin. I don't like going more than a $1-for-$1 amount of what my cash value is. So when I consider my cash value is whatever this Robinhood top number is. But as we can see, I am pretty much at that 1-for-1 mark. But because the market is relatively juicy and primed with good, with a sale, if you will, I would be considered to run one more cash secured put on top of the three other covered calls I'm going to run for QQQ. So let's look at QQQ. All of my Tesla stuff is locked in. I can't really touch it. And I'm not the type of guy that's going to buy back my option to squeeze out more money. I like taking my money up front. I don't ever like paying an investor back the money they just paid me. Not for it. I rather prefer just to let my option expire worthless, or if it gets assigned, it gets assigned. I'm totally cool with that. Because for me, like making, $1,500 to $2,000 a week is more than enough. Once I start trying to get more greedy is when I get sloppy. And then certain trades are not going to go your way because you're trying to force something in the market instead of taking what the market gives you. So for me, that's what my philosophy is. So let's look at QQQ. QQQ currently trading at 598. Man, I hate when it does that, when it closes at a relatively not bad number like 603, and then now it's at 598. But tomorrow, that means it might be primed for some more discount. So let's take a look at some QQQ options, and we're going to discuss a couple of scenarios based off my portfolio. You guys might face something similar in your guys' account, so we'll just kind of talk through it. So at first, I'm going to take a look at what the dailies look like for the cash secured puts that were signed. So the cash secured puts that were signed were the 609 strike price and the 606. And if the premium is like $5, I'm probably just going to forego running dailies and just do a week long. So let's see what that looks like. So the first one, this 606, this doesn't seem right. This premium seems a little too high for what the market is probably going to open with tomorrow. But yeah, it might not even be worth talking. So I'm just double checking. The expiration date is going to be November 18th. And that is definitely Tuesday, November 18th. So just double checking there. This premium seems a little bit too high. But if the premium is somewhere around this number, $280 of premium, and then same thing for this 609 price I bought in is $156, I'm going to bag that stuff in right away. I'm not even going to think to look at the market to see if it's going up or down. Locking it in up front, make $436, and that's going to net me to about $2,000 for the week. I'm already won. That's a big win, right? But if that's not a likely scenario tomorrow morning and the premium is going to be in the teens, like it might be like $5 or like $3 or $7, I'm going to take a look at what the week-long covered call would look like for those prices, which are probably, they're going to be a little bit higher, right? So as we see, it's about, $500 more choosing the 606 strike price expiring November 21st. So, $774, quite nice. And then if we look at the 609, it's $621. So theoretically, if this stays exactly the same, I highly doubt it, because these numbers are probably going off of the 603 closing price and not the 598. But that would bag me another, $1,300, and I'm not going to say no to $1,300 if I see that. But ideally, so those would be my 2 plays for my covered calls for QQQ. And then let's take a look at what a cash secured put would look like. So if anyone's not familiar to running cash secured puts in Robinhood, you press the sell put button. And the way it works is an investor is going to pay you upfront money so that if the market were to go down in a certain direction, you're obligated to buy that investor shares at that price. The only thing you need to bring is collateral to buy 100 shares of that investment. So looking at the 598 share price, this is where I'm tempted. Do I run another cash secured put that's at the money, lock in good premium, and then lock in another 100 shares at a really good price? Below $600, I think is a fantastic price. Or am I a little bit more conservative and I'll choose something that's, a couple of dollars away so that even if the market goes down further, I would even get a better price. I think it really depends on what the market's going to give us tomorrow. Because of the circumstance of this market and it's a bit of a sell-off, I'm willing to forego some of my normal trading practices, because usually when I look at cash secured puts, I choose a delta of like 0.2 or 0.3. But in this circumstance, I'll make an exception to the rule because everything is at such steep discount and I want to buy shares at these good prices. So that pretty much wraps up the video, guys. Nothing too crazy. It just really depends on what the morning looks like, if we're going to see some recovery. But ideally, my 2 covered calls of QQQ probably going to end up running a weekly on them. We will see if there's like a bounce back close to that, my buying point at 606 or 609. You better believe I'll be running something that's closer to at that money for a daily. But I'm probably just going to go weekly, and then a cash secured put, I might just lock in another high premium, at the money strike price for that cash secured put. Yeah, guys, that wraps the video. Don't really have anything excuse me. I don't have anything else to really point out in this video. Hope you guys are doing well. Hope you're staying locked in. Stay harvesting. Matt out. I will see you in the next video.